And that means we are live here, Tackle Trading's Halftime Report, a daily market show where we break down all the price action, the news, everything on our mind, and have some fun while we're doing it. Welcome out. We're on our YouTube channel here, 12:30 Eastern. We've got Cody, we've got Mark, we've got Matt here. I think even, Juan Williams or Coach Noah, happy USA is going to be joining us here shortly as well. We need the positivity in this room, Cody. We need somebody to always come in and bring us up. Matt, how are you doing today?
No, we can't be positive today, Tim. Aliens are attacking the Earth. Okay, we cannot be positive. We need to batten down the hatches.
Wait a sec. How do you know they're hostile?
Oh, that's true too. They could be nice and friendly aliens.
I mean, I've watched Star Trek enough to realize that there are hostile aliens and there are friendly aliens, and I think we're very premature in labeling them hostile.
Listen, Cody, an alien invasion.
Bring your mic down.
Bring your mic down, Mark.
An alien invasion has been priced into the market, so
oh my God,
anything to worry about.
Oh, by the way, if you don't know what we're talking
about, they're not Gorgons or anything. They're nice, friendly, in nice whites. Robes.
Dude, I've seen enough sci-fi movies. They might act friendly. They ain't friendly. Don't trust them. The Pentagon released UFO video footage, I believe. Matt, did you see it?
Yeah, I watched the video, but I've always believed aliens existed ever since I was a little lad.
Yeah. If you're out there and you've not seen the video, just after the show, look up Pentagon releases UFO video for the record. And it's all over the news, CNBC, CNN, Fox News, BBC, you name it. And these videos have been out there for a while, I believe, Cody. Somebody leaked them a long time ago.
Yeah, they were leaked in, I think the first video was leaked in 2011 and the second video was leaked in 2017. Obviously, the military confirmed them today.
Well, yeah. A lot of these shows and things that are considered conspiracy shows, I watch them with the aliens, but you have old World War II pilots that were yeah, we were just flying and all of a sudden there was something else and we weren't sure what it was and we thought it was German craft, but that thing was turning. And you have so many stories like that of just pilots that see these things and they're what was
all I know, Cody, is I'm gonna watch Independence Day today just to get ready.
Does the speech from Independence Day hold up?
Oh,
yeah,
yes.
Oh my goodness.
I'm not sure.
I hope that was a rhetorical question.
No.
That's a great speech. Was that Bill Pullman?
Yes, it was.
Bill Pullman, right?
I think so, yeah.
Noah, what are you doing in the chat and not in the Zoom room?
What's more accurate? If we speculate on where the aliens come from and their intentions, or when the coronavirus is going to have an economic impact?
Oh, they come from the main star of Orion's belt. There's
everyone believes in the COVID-19. Everybody believes in aliens.
Welcome to America in 2020.
Yeah. By the way, the other news headline that just grabbed my attention, Mark, you told me about it as well. I guess this PPP loan money everybody's been talking about, there's a lot more scrutiny around it. The Los Angeles Lakers actually applied for it and got some government money, Matt. NBA franchise.
Well, dude, you got to pay LeBron his money.
Dude, Mark.
Dude, if there was ever another reason to hate the Lakers,
in my opinion.
Are you saying you're less friendly to the Lakers than you are to these aliens?
Full disclosure, Utahns hate the Los Angeles Lakers more than any other NBA team, correct?
Oh yeah.
Yes.
Yeah.
Okay. So there is already a hatred of the Los Angeles Lakers, but shame on the Lakers here. I mean, why are they getting $4 million from the federal government so that they can handle payroll? The Lakers are worth $4 billion. This looks so bad.
Can we get LeBron to do the Game of Thrones shame walk? That's what I want. Just the whole Lakers just walk down the street and do the Game of Thrones shame walk. So,
dude, I went to a lot of jazz.
Talking about Cersei's walk of shame.
Shame.
Have someone ringing the bell the entire time.
Here's the problem. Maybe Laker fans in LA are different. Utah Laker fans are the most annoying fans on the planet. When they come to the stadium, it's just
Utah X fan of some other city, some other state are the most annoying fans. It's not just Laker fans. My friend, young man, in the 90s, you were cheerleading for the Michael Jordan and the Bears.
I
was going to say it's the more annoying thing is not even the local sports team of whatever state you're from. It's when you pick a random team just because they're
Yeah,
winning that year, and
that
you're
was
like,
Coach Jim Cody in the 90s with the Bulls.
No, that's not
Instead
what
of
happened.
instead of cheering on the greatest Jazz team that has ever happened and existed, he cheered on the front running Bulls.
so don't be
In
wrong.
the
Remember-
97 and the 98 NBA Finals, he cheered
Yeah.
against his own state.
You do.
Now
Have you
get
been
your
watching
camera
The
lens
Last
Jordan.
Dance?
Yes. I
No,
haven't
get
seen
your
it yet,
camera
no.
lens open.
I have not seen it.
Obviously, it's a slow news day.
Yeah. Well, not necessarily, but some of those headlines did grab our attention. We're having some fun. I mean, all the other stuff is just speculation and garbage, Matt, about when they're going to have a vaccine, when this is going to happen.
Yeah.
And this vague positivity around, oh, well, the economy's reopening. So everybody, rah, 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 rah. So we will break it down. There are quite a few companies with earnings. By the way, Google reports after the bell.
Before we get to that, why don't we show what happened on the cash opening? The
Do it.
headlines we're all tracking this.
Break it down,
They're
Cody.
the headlines were all tracking the futures market where it's just up and up and up. So all the headlines we were seeing was market to open bullish as reopening adds to the bullish bias. Market opens and bam, just a straight drop off. This was a false breakout. So when you go back to the daily chart, you can definitely see where right when it just tried and failed. And now we got a doji candle. The headlines in the market are not correlated right now.
Whenever
Well, you know,
we see a fake out like we saw here today, and Cody, great analysis on the overnight action, it always reminds me of confirmation. It always just it's just a gentle reminder to be patient, wait for confirmation, and like Noah says, never be the first one to jump off a cliff.
Mm-hmm.
You got to see if the person actually makes it without breaking their leg on a rock or something.
One thing that just keeps
See if the water is actually soft.
Sure. One thing's grabbing my attention every time I look at a daily chart in the S&P, though, is that green line right there. And it's right at that 3,000 mark. You got the 200 period SMA. Guys, I mean, it feels like the market wants to test that. Does it not? I know this is a failed breakout today.
It does. It seems like there's going to be a battle there.
Mhm.
Wait, Tim,
Stop,
you're not supposed to say
3,000.
that the market's going up. You're supposed to be Timmy Bear. What are you doing?
Timmy the Bear. Timmy Bear even sounds a little bit softer.
I think we should go Timmy Bear. I think we should go Timmy Bear.
Timmy Bear
That's
like
much
Teddy
softer.
Bear.
No.
Timmy Bear, Teddy Bear. Okay,
No,
It's
he's
not
Timmy
the
Bear when he says something bullish. He's not Timmy the Bear. What when he's
Yeah.
like, oh,
Timmy Bear.
market wants to go up. That's Timmy Bear.
Sure. Noah, what are you reading technically on the S&P right now? Just broad market action.
A little bit of whack-a-mole there, just like Cody was saying. It popped its head up, got smacked back down, but as Frank says, it doesn't close till it closes. So who knows how that trades into the close?
Mm-hmm.
I think you could see. I do think you're going to see a retest of the 3,000.
Mm-hmm. It feels that way. Obviously, the breakdown here on the intraday, day traders have been taking advantage of that. You've got a line in the sand there around that 20. What is that, Cody? 2860 or so? 2850.
2850. I would call this one of those a range of support versus a hard
Sure.
support. So that range of support is probably about right there, and you can see where it's just been bouncing around in the intraday. So it's hitting down off that, and then you have the rising 200. This is on a 15-minute chart. That could possibly push it up. If we ever go to, let's say, an hourly, see if we have anything there. We got the 50 hourly. So multiple support SMAs along with that range could hold this here. I don't necessarily think it's going to close up today, but tomorrow is very likely.
Mm-hmm. Back on the daily chart for a minute, give me a quick peek at the NASDAQ if you can. A couple of days in a row, guys, I've seen red patches on the heat map on technology as they've been hesitating. Google reports after the bell, Microsoft later in the week, all that kind of stuff. So tech earnings have the markets hesitating a little bit here. Obviously, it's had relative strength, but let's talk about some of those earnings anticipations and also earnings reactions here today. Give me a peek. Let's start with Pfizer if we can. PFE. Mark, you actually analyzed quite a few of these earnings reports overnight and this morning. What did you see out of Pfizer?
Nice thing about Pfizer is that they actually provided guidance, right? That's not exactly the most common theme to happen in this earnings. So they actually said that the revenue they expect 2020 about 48.5 to 50 billion. Key thing here for pharmaceutical plays. They said they have not seen any significant disruption in the supply chain. The only real hesitancy in pharmaceutical companies in this environment was a disruption to the supply chain. They said, we don't see any of that. Revenue came in a little light, but the fact that they provided guidance, the fact that they said that they didn't see any disruption to the supply chain for individuals that looking to acquire Pfizer if it dips again, that was very hearty for me personally. Really enjoyed seeing that. You know, once again, not interested at these price levels, but if we were to have a dip in pharmaceuticals, if we were to have a dip in the broad markets, Pfizer for me becomes a safety play at this point. So encouraging things out of the Pfizer's earnings report.
You know, holding guidance has not been a very common theme from these companies. A lot of them are polling, so that's always going to be a good thing when you do get that.
Well,
Give me
it's very
hold
easy
on.
to
Let's
not
talk
make your
about that
numbers
for a
matter
second.
Go ahead.
when
Mike.
there's no guidance.
Let's talk about the guidance for a second. I don't agree with Jim Cramer on a lot of things, but Jim Cramer came out today and said every company should pull guidance. I don't think, and I agree with that. I don't think any company can accurately predict where their guidance is going to be a year from now. There's too many variables. There are too many economic variables, and the supply chain from the pharmaceuticals, I understand that, but it's not exactly like the supply chain from the food companies.
I don't
Yeah,
know.
but when a company does have the strength to actually provide guidance, I mean, there's not many companies. It's only about 10% of companies that are reporting earnings that are even doing it.
I know, but I'm just saying they're basically guesswork is what I'm saying.
But
Yeah,
isn't
but
it all some bit of guesswork though?
But look at the companies that have provided guidance: Abbott, Johnson & Johnson, Pfizer. What's the common theme here? Healthcare.
Healthcare.
And when they can see their different revenue streams, I mean, I think once again, not interested in buying Pfizer at this level, but if there was a dip, the fact that they have some semblance of a future, as far as they can see it in some level, is a lot more than you could say about a Harley Davidson, who provided
or a retail company or a food company, or I do agree with that.
So I agree with the general sentiment of Cramer and what you're saying there, but I think there are going to be a few exceptions where they do have somewhat, and the common theme has been healthcare in those companies that have some semblance of what their future looks like.
If there's any sector of the market that can provide guidance, it would be healthcare.
And yet healthcare is down here today, obviously. Even
everything's sold off after they open.
Yeah.
So.
Well, it is out of notable weakness. I mean, I would say it's the red patch of the market from the sectors, tech and healthcare. Healthcare is a hard one for me, guys. I know we're getting good reports out of Johnson & Johnson and Pfizer and all that kind of stuff, but you've also had a huge relief rally here. And I still don't think we know exactly what the impact is going to be to hospitals as well as insurance companies. As we get their earnings, we'll get more clarity on that. I know it's been a stronger sector, and that's a pretty decent chart. But I still have a lot of questions around healthcare, quite frankly, that have not been answered yet. And so much of this,
because you're Timmy the Bear. You
that's
have
right.
questions.
Yeah, not Timmy Bear there, just Timmy the Bear. So actually a bearish argument.
There's no "the" in there.
All right, Cody.
All right. All right. Hey, halftime crew. Type out whether you like Timmy Bear or Timmy the Bear better. Let's let the crew decide here, Tim.
Well, you have Teddy Bear, but you also have Winnie the Pooh. So they're both teddy bears. I mean, Timmy the Bear. I mean, I'm
starting to hate this nickname right now. I don't like it. So we're moving on. I'll come back with Timmy the Bear here in a minute. 3M next, if we can. Mark, 3M obviously very important company and whatnot. What did you see in 3M's earnings report?
They actually their EPS was 222 compared to 151 a year ago. Not as strong as a forward-looking thing. Their healthcare division, the thing you didn't know about 3M is that, I mean, you got a lot of different
Noah, Cody's screen went down. Let's have you bring it up. There we go.
Nope, we were just transitioning on purpose.
The baton pass. I like it.
I mean, you got a lot of different
I was getting internet warnings.
Yeah. Go ahead, Marky.
And companies with, a lot of companies have lots of different revenue streams, right? I mean, we're dealing with really, really large companies. And so a company like 3M, their healthcare section of their company looks solid, right? The other components of the company, there's some questions moving forward. This was did great on earnings.
MMM, Noah, real quick.
It's great on earnings.
All right.
But like moving forward, we didn't have that same type of clarity across their entire business structure. I mean, 3M right now after the gap up, and so many things gapped up. I mean, you're looking at price levels pre-COVID-19. You're back getting it within the trading range that it was in for the better part of 2019. So while you're not at those highs from 2019, you are back in the trading range. And whenever you have a company that has questions in their revenue streams that are diversified, but there are some real questions moving over on some of them, I'm just not interested in this type of company, even if one of their segments is looking good. But like you saw everything gap up. Like right now, just get used to gap up on earnings. I mean, let's go to Harley Davidson.
But real quick, don't you have to fade that gap? I mean, forget whatever symbol you put in there. You have a gap into 200.
That's exactly what you do on a day trading. Like,
have to, want to.
Yeah,
I mean,
this morning it was so easy to day trade where things gapped up and you just pick something and fade it down.
Yeah. Price action there is obviously not sustainable to the upside. It did not hold itself. It hit the right into the 200 moving average, came back. I think we're going to talk hog next here, Mark. Let's bring that chart up.
No, I mean,
this is price action.
And this is the priced in, doesn't matter how bad an earnings report is. You are seeing disjointed gapping up measures. And this is something to think about in the days ahead. Because, I mean, hogs earnings, once again, everybody knew they were going to be bad. This wasn't a shock, but their EPS was 46 cents to 80 cents a years ago. They cut their dividend to 2 cents a share from 38 cents. So this is the disjointed nature of the market we have right now. Trade accordingly, position accordingly, because you have a company that materially impacted by COVID-19, by a lower economy, that slashed their dividend from 38 cents to 2 cents, and yet you have a gap up. Just get
They
used
also
to
halted
this.
stock buybacks, Mark.
Yeah, just get used to this disjointed nature of things. You know, normally when a company slashes their dividend, this is devastating for stock price. And yet gaps up this morning. Get used to that, because it's like the jobless report from the last 4 weeks. Or, you know, what has that meant? Record numbers of jobs lost, but market jacks up that report, jacks up price every Thursday. It is a very disjointed, you have to set what you would normally think of as bearish catalyst to the side. And in the short term, trade price action. From an investing standpoint, well, I'm going to be very, very cautious.
Yeah.
Very, very cautious, because once again, halting buyback programs, slashing dividends, this isn't a signal of fundamental strength in a company.
Not only that, hog is sensitive to sales in Europe. The recession in Europe is probably even going to be harder hit than in the U.S. We don't know that, but
that's a pretty good guess.
That's a pretty
Have millennials learned to ride the big bike yet?
I don't think they have. And by the way, I mean, we're talking about a high-end consumer purchase that in the face of rising unemployment, this one didn't make sense to me, but we've always said earnings gaps can be irrational, obviously. Some of the volatility in the movement can be a little bit unpredictable, but I don't see that as any kind of interesting bit of fundamental news. And don't you have to rely still on fundamentals? I know the world is getting crazy right now and everything's about this big hopium train, but don't you still have to look at raw fundamentals of companies as you're assessing which ones you put on your watch list and how you approach them, guys? Matt?
I mean, I think a good path moving forward is short-term trade price action king in the short term. From an investing standpoint, how do you not trust fundamental? I mean, what is Carl Icahn doing? What is Berkshire Hathaway doing? They're not exactly saying, let's go out and buy, you know, quite the opposite. Very, very notes of caution. I think from an investing standpoint, following their lead is good advice. And in the short term, trade price action.
Mm-hmm.
From a trading perspective, yes, Mark's right. Trade the price action, trust the price action, trust price. From an investing perspective, Tim, to answer your question, none of this makes sense.
No, it didn't make sense on hog on the gap out either, which is why I would be a fade on that one as well. Let's talk Caterpillar. I mean, very important company. We've been talking about Caterpillar for quite some time as one of the be cautious type of stocks. Mark, this one was an interesting report. What do you see in Cat's report?
Caterpillar, if not my least favorite company, is right up there. I mean, Caterpillar, and we've been talking about this for weeks on a, you know, sell the rip, you know, type company. EPS just it was still profitable in Q1, but way down from a year ago. Revenue, and this was one of the things. Q1 revenue last year was 13.5 billion. It only came in at 10.6 billion on Q1. Expect Q2 to be an absolute disaster, and expect, unless you do have a V-shaped recovery, Caterpillar is still trading at the lower end of the range that it was trading in 2019. And you are facing, even if America U-shapes on its recovery, man, a lot of parts of the world are in real struggles with their economy. And Caterpillar gets close to 60% of their revenue and 60% of their profits from worldwide sales. Caterpillar just does not look to be positioned well to be a rip-roaring company based on any fundamental or common sense metric moving forward. It's just not, I mean, it just does not do well in recessions ever, let alone a recession of this magnitude. So, you know, those revenue numbers in Q1 being so far down, like so far, I mean, man, this might be one of those oil situations where things are really worse than even short-term price action. I mean, think of oil back when it was in its 50s, 6-7 weeks ago. I mean, Caterpillar does not look attractive right now.
Mm-hmm. I'm seeing a theme here today, and I want to get you guys' take on it. Obviously, a lot of companies coming out, the initial upward movement. This was the market as well today, but the reaction to the earnings news was somewhat positive, but then it's not sustaining that news. Same thing with all of these hype rumors that are coming around these healthcare companies the last couple of weeks. Do you think the longer we go through earnings season, the less you can have this hopium type of just upward mobility from the market, because they're not holding rallies? I mean, Noah, Cat's not running there. None of the stocks we looked at that gapped out are running there. Noah, what's been your reaction to prices on companies that have reported so far?
Well, I'm surprised at the resilience of it, and I'm also surprised that the market hasn't had bigger reactions to it, because I think everybody's hungry for information. I mean, really hungry for information. And it's not, at this point in time, everything I've seen is not necessarily giving me a whole lot of insight forward looking. And I think I do agree with Matt. They really probably should be pulling guidance because there's a lot of unknowns out there. But I can also just think about some of these companies like a Caterpillar, for example. I always want to know what's going on with the US dollar because they rely heavily on exports. And that's something where if you have a strong dollar, that slows them down. But I think as we get further through earnings that you're gonna see a clearer picture come through, just because we have all these companies that have had, you know, pretty decent earnings so far. We've also had some pretty good misses, but as we get the cumulative data, I think the market sentiment can formulate an opinion with more coherence. So that's kind of what I'm watching for, is more of a cumulative data. And it, you know, you use that little heat map on FinBiz and you just switch it over to show you your earnings, you know, outcomes.
Bring that up here, Noah.
Yeah, let me pop that open.
Yeah, I like that little feature in the heat map. I think people normally just use the heat map to look at prices up and down on a given day, which is very, very valuable for. But there's a lot of tools in heat maps where you can actually look at the earnings performance, earnings reaction. Give me that earnings day performance. A lot more green here, guys. I mean, it seems like we are pumping up on the earnings. We're getting the initial burst up, but then a lot of these stocks are not holding those initial one-day gains. Mark, the further we see this, I mean, is this good or bad for stocks, do you think? Do you think this is, am I on anything here, Mark? I mean, are you noticing the same thing?
Well, I mean, your heat map is short-term price action, right?
This is the one-day earnings day performance. So these companies reported and it jumped up short-term. Yep.
I think it means jack and squat. What did Caterpillar do on its initial gap up today? It gapped up. What did Hog do? Hog today is going to show a green, on your little map, a green little stick. Does that mean, based on that thing, that you're willing to go based on a one-day performance on Hog? Like, this is a far bigger picture, a far more protracted storyline that's going to play out over time. So, I mean, it's Hog, it's Las Vegas Sands, it's WWE. These things getting jacked up on their earnings.
Yeah, right? But these failed gaps, I mean, that can't be bullish for the market. failed gaps coming back to reality and then turning back the charts and the
it's
patterns.
reality. I mean, when I look at that map, I look at Johnson and Johnson. Johnson and Johnson's earnings was amazing. I look at Procter and Gamble's. Procter and Gamble showed nice revenue streams and a steady company across all of its revenue streams. This is a stock picker's market moving forward for the next 9-12 months. This is not a macro, let's try to analyze big picture based on some random thing that might have worked over the last 10 years. Johnson & Johnson earnings were great. Procter & Gamble solid. Banks were terrible. Hogs was terrible, regardless of what a green or red says. This is going to be individuals breaking it down, making calls, picking individual companies. Those are the individuals over the next 12 months that are going to do really, really well. So it's a stock picker's market right now.
Yeah. Back on the charts if we can here. A couple more companies I want to round out some earnings results from and keep looking at them. Mark, Southwest Airlines I want to take a look at next if we can. LUV. What do you see in that report?
Well, I mean, once again, terrible, right? But everyone knew it was going to be terrible, losing 18 cents a share versus making 70 cents a year ago. The interesting things, a couple interesting things. One, they launched a public offering of 55 million shares, which once again, the airlines, and once again, I think everybody can agree, and if you disagree, please say, selling additional shares to raise capital is how you should do it in this environment. Like, if you need capital, hey, sell some more shares. It dilutes share value, but it also is concerning to me that if all of this federal money is free, why are airlines now diluting the value of their current shares by offering huge additional purchases now? You're starting to see this more and more. Darden Restaurant did it last week. You're seeing these secondary offerings of shares. If the government money is free, if all of this, they wouldn't be doing this, right? They're raising capital in however they can. Southwest also announced that it plans to take delivery of less than the 27 MAX aircraft previously expected from Boeing. So outside of the numbers, and this is where analyzing information is going to be really valuable. What are they doing outside of the numbers? Well, airlines are doing everything they can to raise money, which really scares is terrifying to me from wanting to purchase airline stocks at these price levels. And, they're canceling orders. Boeing signaled yesterday that this is going to be a really, really, really long journey in aviation. They do not expect, V-shape, U-shape, L-shape. You hear all of these economic terms. They're basically saying in common sense, this is going to take a long, long, long time to get back to previous levels. So what you're seeing outside of the numbers is very, very concerning.
Matt, thoughts on the airlines?
Well, my thoughts are very similar to Mark's, but speaking specifically of Southwest Airlines, Noah, if you'll go back to the chart there, Noah, can you teach a little bit about bearish continuation patterns? Because I'm seeing one that is very, very distinct in Southwest Airlines right now.
Well, I mean, coupled with what we were just talking about, like issuing new shares and diluting of shares and, a tough economic road ahead of us, I do see a good continuation pattern that's also backed by what I would consider your fundamental analysis there. So we've got that price action coming down hard into that $29 support zone. And you see an initial, strong rally. Then it comes back down and retests that zone. But the subsequent rally doesn't have nearly as much mustard on it. So it runs out of gas. And that lower high, those two lower highs back to back, that's really what sets that up. And that's an inverted cup and handle or a descending triangle, depending on how you want to define that. But you've got that lower high and it's consolidating down. Those usually tend to either break down, like we suspect, that's the continuation pattern part of it. Occasionally you'll see them reverse and rally back out. But with most of these consolidation patterns, like in descending triangles, cups and handles, they have about a 70-30 probability, according to John Murphy, the great chart pattern guru, where, in this case, there's a 70% probability that you see that pattern continue down. Well, you add in the factor of them adding more shares. If they're diluting shares, well, that will bring the stock price down, but it also makes it more accessible to people. So it's a short-term drop, and then the value investors will still come in because they like the price. But that technical zone, if you start seeing it close down below 29, that could be a very clear signal that that support zone's failing. And usually you'll get a good drop about the size of one of these two cycles. So if you have, from 29 to 40, well, that's a pretty big cycle. But this one from 29 to 37. So about a 7-point range. Well, yeah, that means you could see about a 7-point drop, and you have to go reference the rest of the chart, like on a weekly time frame.
So we're thinking 25.
Yeah, about 20. Well, 25 would be a pretty clear number from where it's at. 30 to 20, maybe as low as 20, but you got old resistance back here at 23. That's about a 7-point drop. So, these old resistance support zones will come into play just because of self-fulfilling prophecy, even though that's clear back in 2001 and 2002, just they become self-referencing. And so even though that data is 20 years old almost, people still will look at that. And I think the patterns here, it's not just LUV. This is where you see like really strong hypersynchronicity. Look at the airline index, exact same. This has got a little bit more of a symmetrical triangle. But you look at some of the other airline stocks like Delta Airlines, same basic descending triangle pattern. They're showing a little bit more life right now. American Airlines, same basic pattern. So the one that looks like it's set to break the most right now is Southwest. But the others, those little rallies will oftentimes give way and just finish forming the descending triangle. So I'm pretty bearish on the airline. I don't expect a recovery. I don't know how much more down you have because they did take a pretty big hit already, so their value has been depreciated. But if you see them issuing more shares, I think that leads to down on the target of 25, 23, somewhere in that ballpark makes sense.
Mm-hmm. Yeah, I agree with the analysis 100%. That $20 level on Southwest does seem interesting, though.
Well, it is. I mean, it's a big price level for it, right? And a lot of times it's just like anybody who owns that or anybody who is fundamentally value investing, trying to pick it up on the cheap. Well, if you had a support zone here at 20, 29, that's where people start putting stops. And you'll have people putting tight stops and loose stops. And if it starts to break, it starts clearing stops. And then the bears will sometimes pile in on that. If they see a break, they'll borrow shares and sell into it. And so between clearing stops below support and bears, adding inventory to the market, you usually see a pretty steep drop once that confirmation really comes in. At this point in time, it's just flirting with that zone. It's established a new low, but it hasn't closed down there.
I'm still bearish on the airlines. I mean, every bit of commentary, every bit of consumer behavior that I've kind of examined in the way that I think this whole thing is going to kind of open itself up. And even as we move forward in the best expectations, these companies are going to lose money for a long time. Yeah, they're just going to lose money for a long time. I mean, the fundamental backdrop, didn't Delta say they were losing $100 million a day or some crazy number like that?
Oh, at least like they're burning through. I think it was 50 million is what I saw, but it's something huge.
Like they're just burning cash. And I know they're trying to find some support down here, Matt. But you've got to be real concerned about a breakdown and continuation of momentum. Good eye on that and good analysis there, Noah. Let's move on and talk about a couple more companies rounding out earnings. And we're in earnings season. Obviously, these themes are going to be at the forefront of our news. Pepsi, Mark, I don't think we hit that one yet. And then UPS, if we can here, Noah. Pepsi first.
Pepsi's was mixed, but they did withdraw full year guidance. So, like, the thing I've seen out of Coca-Cola and Pepsi now is, you think of Pepsi and Coca-Cola as these traditional safety plays, right? Staples, safety, all of that. I just don't like them at all from what I've seen from the revenue streams of these companies. There seems to be some material impact. For example, when Coca-Cola said, about 50% of their revenue comes outside of the home, right? And are these things a disaster? No, absolutely not. They're not on the level of a restaurant or a gym or a casino or something directly in the line of fire. But man, there's a lot. I mean, there's a reason they pulled guidance this year, and that's it wasn't because they thought things were going to be great. These aren't healthcare stocks that can get some semblance of a future. You see material impact from revenue streams in these traditional staple plays. And so when I think of a staple, I mean, because you don't really think of Pepsi or Coke as a growth stock, right? And so I just, compared to other staple plays, I mean, I can't get behind them, especially with zero visibility into the future.
Yeah, no, lack of clarity obviously on these as the distribution channels. I mean, we just aren't seeing a lot of clarity on that, even from Coca-Cola when they had their earnings report as well. Last one on earnings that I got on my list here, Mark, I want to talk about is UPS as well. Obviously, big shipping giant. You're down at decreased, price levels and whatnot. What did you see in their earnings?
Well, once again, looking beyond the numbers, two key things: they suspended share buybacks, withdrew guidance. You know, when I can't get a clarity of the future, when I see a company slashing dividends, when I see a company reducing or eliminating share buybacks, when I see companies attempting to raise a lot of capital, the conservative side of me says, am I willing to buy this company at some price level? Sure, I guess. Not here though, right? Like, I think you have to force yourself to require a really, really deeper discount in this situation, like probably pretty deep, when you can't see any clarity into a company's future. And I mean, because all you're doing right now is betting on faith, right? When a company is signaling that they're doing things to preserve or raise cash, they're not doing that out of strength. They're doing that out of weakness. When they're removing guidance for the year, they're not doing that out of strength. They're doing that out of weakness. So am I willing to take a bet on a company like that at some point? Sure. But it would have to be a really significantly deeper discount in order to make that bet.
And frankly, I mean, all these ones that are reported, there's a lot of important companies there, but none of them are going to be as important as Google earnings after the bell. I want to talk Google here for a minute, then we're going to get back into broad market themes and whatnot. Earnings season, I mean, this is what we needed, right? We need some clarity from these big companies. We need to see information from them. Hopefully it can paint a bigger picture, and it might actually start to create a market that does become a stock picker's market. Anticipation for Google, guys. I saw some analysts guessings, those swags that they do. Basically, they're expecting 9% revenue drop, year over year and whatnot. Mark, what are you looking for in Google earnings tonight? Because this is going to be an important one.
Revenue is a big thing for me in this environment, because we only got a taste of what the first quarter was with the lockdown situation, with the business impact situation, with business spending situation. And so when companies with that little taste, like the Harley Davis one, scared the living bejesus out of me, the airlines one was monumentally disastrous, even with that slight taste. Give me what that revenue was in the first quarter, because we get a sense of what that might be moving forward. So revenue is what I'm looking for first and foremost out of Google. Revenue, how does Google make its money, right? The bulk of its money is made from good old-fashioned ad sales. Where was revenue in that little taste of the lockdown? Because none of their products were adversely impacted, right? You could still go to Google. In fact, probably more than ever. You went to YouTube, probably more than ever during that little sparse in March. So metrics of being up, like YouTube viewership, well, we knew that. Overall metrics outside of revenue, I don't have a lot of interest in. I want to see what those revenues numbers are, because they could give you a sense of not what second quarters will be, but what third and fourth and Q1 2021 might be in a compressed, where businesses are not spending as much money. That revenue number is going to be really, really big to me.
Would you be more interested in Google if it gaps up or down, Matt? I mean, street expectations are that they've already lowered their, the bar here. I think a lot of people think they're going to come out and beat it. A gap out, I mean, would you be interested in a breakout there, or would you be interested if Google came back and gave you a better price?
If Google came down to 1,000, I'd be much more interested than if it went up to 1,400.
These FOMO rallies, I just don't trust them.
Not in any capacity do I trust them.
Yeah. And I'm very concerned about Google's ad revenues and what they've been making. And I mean, I wonder how big companies have been approaching some of these key areas. I think, Mark, you're dead right. Of course, YouTube viewership has been up while people are home. You know, Netflix viewership is up. Everybody's at home doing stuff online, right? But did that translate into more money? And yes, I do believe in Google long term, of course, but this is a key company, obviously, for this market rally. It's a weird one here today, guys, because Google's down. You know, go ahead, Matt.
Well, and it's also at a very important technical zone, you know, kissing out that 200-day moving average for the last week and a half, kind of as it's been, you know, fading as it comes into the earnings report. But, you know, I'm looking at Google's earnings and I'm looking at YouTube subscriber growth. That's what I'm looking at. I want to see what type of growth they have. Do they have the same type of growth that Netflix had with their first quarter earnings? That's what I'm looking at. I think you will see ad revenue decline, no doubt about that. I think everybody anticipates that. But at the end of the day, I'm looking at subscriber growth from YouTube specifically because they just barely started announcing YouTube subscriber growth. And that was just last quarter. So that's kind of what I'm looking at.
Yeah. Market maker moves 5% here, guys. That feels low, frankly. I know in the past that's been fine, but that would put Google at $1,300 or about 1180, a 57 MMM projection. Noah, do you think their price and volatility, you know, fair there?
That is probably fair. I mean, I don't know. It seems, what's the average daily range on that? Let me go back to the chart real quick. That's probably not too far off their historical analysis. So 39.35 is their ATR. So that's 1.5 ATR. So that's not unrealistic. When for a stock that can really gap and move, though, I think it's pretty modest.
Yeah. By the way, Cody on the back end, being the good producer he is, he reminds me, speaking of subscriber growth, if you're new to our channel here, make sure you click subscribe to our Tackle Trading YouTube channel here. We do this show each and every day.
Yeah, let's help Google's numbers. Let's go. Come on.
Let's help Google's data.
And if our analysis of the Google stock impacts the algorithms on YouTube, Google's the best company ever.
It's a complete buy.
Like, Google's the best company ever. Stock's going to skyrocket. Come on, YouTube, give us those algorithm bumps.
That's pretty funny. Another very important company for tonight after the bell, because it's a popular trading vehicle, is AMD, guys. You know, obviously chip makers, and this is one of those stocks that has been a runner. It's up at elevated levels. We're about to crack the high there. You know, if you had a really good gap out here. Mark, what are you looking for in chip makers? I know this is an important sector for you, semiconductors. What's your anticipation?
Well, I mean, let's go back let's go back to a conversation we had last week on the halftime report and with some of our pro members. Like, and I speculated that earnings don't matter this quarter. And so a lot of those like bumped up volatility numbers on earnings, because things will be priced in. I mean, you're seeing that like on earnings that are disastrous, you're seeing gap ups actually. Like, you know, that fear of selling down below because things might crash. We're not seeing any evidence of that at all. Like when things have gapped down, they've been very modest. I mean, go find me a company that has fell through the floor in earnings this season. I mean, go find it.
Yeah, but a lot of those companies, Chucky, were already downtrodden. I mean, they're already down 30, 40%. I mean, they were getting
But I was talking about those jacked up naked put numbers, those jacked up volatility plays.
I'm with you on that 100%. I'm just saying, unlike a lot of those other companies we've been looking at that had, you know, very underwhelming earnings, but actually went up because the price has been down so much.
Oh, I see what you're saying.
When you look at AMD and when you look at, say, Amazon's at an all-time high right now. You know, obviously come down the last couple of days, but I mean, they're at 2,400. AMD's at their all-time high with very, very, very high PE ratios. I think there is a different form of analysis when you're talking about some of these stocks that have held up in the face of some of the economic reality of the situation. AMD, Amazon, Netflix, some of these stay-at-home stocks. So I do think there's an additional expectation to justify the price action on these earnings with AMD.
And I agree. And that is an excellent point. So if you were to see a stock gap down tremendously, it would be in the situation that Matt described, where things are at elevated levels, basically erasing all of the losses from the March sell-off. Expectations are high. That would be the type of company if it were to occur. But like, is it possible that we go through this earnings seasons and don't see one catastrophic gap downward?
No, we'll see it.
We'll eventually see it for sure, but it just feels like it's not happening often right now. But what you are seeing is volatility after the earnings. Have you guys seen Netflix post earnings? I mean, it's on a beautiful pullback, but it's down 10% after what was supposed to be a strong earnings report, you know, that they had and whatnot. It gapped up into that 450 range. Now we're back down at 408, while the market has been going up, by the way, and holding. So
I know, but give me a doji. Just give me a doji.
yeah, that bullish retracement.
I mean, that's one of those situations where you're looking at Netflix post earnings. You're like, yeah, I get it. I know what the CEO said, you know, but that $400 mark, it just seems like such a significant whole number. I mean, that's right where the rising 20-day moving average is at. Obviously, it's down, you know, healthy on today, down 3%. But this situation on Netflix really kind of looks like one of those, maybe not a standard traditional bullish retracement, but you give a doji, you give an upward movement in price with confirmation, that's a good buy signal.
Yeah.
There could be a very excellent trading opportunity in Netflix. Like, you know, think about that Zoom setup from a few weeks ago, where you have the pullback and then you have the nice little setup, and then you had a really,
no pun intended, but zoom in on that, because it did take, like Matt said, give me a doji. It did take about 6 bars for that pullback to develop.
And we talked about it every day on the halftime report here. And then you got your breakout of moving averages and the short-term resistance zone. And I mean, it was a pretty nice little trading signal, right? So like these deeper pullbacks on some of these stay-at-home stocks, like these stay-at-home stocks in particular, if you get a nice little trade setup, it might take a few days to develop, and then all of a sudden you have a momentum shift. That's all it takes is a day for, oh my goodness, virus, blah, blah, blah. And then all of a sudden you have this massive trading opportunity. These stay-at-home stocks.
And I agree with that, Mark. I mean, Zoom's retracement coming down into 50 was a good buying opportunity, no doubt about that, looking historically. But that was a really tough trading environment on Zoom. Unlike Netflix, when you're looking at Netflix, you're looking at a traditional bullish retracement on Netflix, where you have just standard days down coming into a previously known support level right there at $400. I like now, obviously the Zoom retracement worked out perfectly, but I like the Netflix retracement, if confirmed with slowing momentum, upward movement in price, more than I like the Zoom one.
I think it's a really, really good exercise for any new trader to be able to do, is to try to and learn to project what it is you want to happen in the price action to help you set up your trade. Doji, price confirmation, reward to risk. I mean, that's all part of the step system. I love this analysis here, guys. Let's keep moving through the markets if we can. Obviously, the AMD news, all that. I also have Starbucks and Ford here tonight, but earnings, we're going to keep talking about them day by day by day by day. Starbucks earnings, I can't imagine that they're good. I mean, are people still going to Starbucks? I think they've closed the in-store stuff, and maybe the drive-through's been hot. I know a lot of, those type of locations have been
Have
good.
you driven and seen a Starbucks drive-through recently?
Is it just busy?
Oh my God, I have never seen lines that long.
You can't go.
Like they're you literally like wait
Ridiculous.
a half hour,
Yeah, it's
40
ridiculous.
minutes.
I don't have the patience to go.
The lines are massive on Starbucks drive-throughs right now.
Dude, I've got my.
Like I found this machine in my house that like makes coffee. It's pretty interesting.
Me too. But obviously Starbucks does more than just that. People love their fluffy drinks and their sugar drinks and even the Starbucks food and whatnot. I get it. I don't know what to expect on Starbucks earnings. We're going to wait and see and break it down. But yeah, Mark, maybe these kind of companies have just been busy, and we will just hear from them on that. Let's look at Starbucks tomorrow. Let's move on to a couple of the companies. Give me mRNA if you can. And I want to bring Cody in on this one, and then we're going to come back to crude, gold, and the market. We'll hit everything here today. Cody, I read a report from the Coalition for Epidemic Preparedness Innovations. I had to write that down to make sure I had it accurately, that we're going to have some emergency vaccine in 2020. And Matt, talk about, our podcast yesterday. We were saying we knew these kind of headlines were going to come out. I'll get Matt's take in a second, but Cody, what is an emergency vaccine? What is different with that?
Literally, when you hear that, it just means that they're not going to be able to go through all the vigorous testing regimens to make sure there's not as many side effects with it. So
they're not just
injecting. Take it at
injecting.
your own risk.
It's not
we're
just disinfectant.
We're the test rats, right? We're the test rats. That's what that means.
Exactly. That's exactly what
Okay.
that
I'm not getting that vaccine.
means. No.
Oh
I'm not-
man,
I'm
where
gonna
is your
have
sense of
vaccine as of
adventure?
right now, Cody.
Hey,
get-
this is a definite let someone else jump first.
Are these hopium-based headlines around
course it is,
coronavirus
Jim.
treatments?
Of course it is.
Yeah.
100%. There's not going to be a vaccine this year. Get over it.
No, it's not going to happen.
So why
Not
do we
one
keep,
that I would trust.
why do you guys think we keep seeing headlines every day
Because
like
people
this?
want it so bad. Their
Yeah,
teeth
that's what they
hurt.
want to hear. You tell the people what they want to hear. Now, what could possibly work before a vaccine is the transfer of antibodies from people who have overcome it to the blood of people who don't have the antibodies yet. But then you run the same risk as blood donations and diseases. So that could be a more viable option before vaccine. Is just
Yeah.
transferring antibodies.
But even the antibody thing, I mean, we don't know if that means that you can't get a reinfection or anything like that yet. There's a lot of presumptions
We
around
also
the
don't know
antibody
about
use.
mutation
Yeah.
and how that impacts it.
Yeah. Well, we are going to be testing a lot of this reopening of the economy here soon. And there's always this positive
Listen,
assumption built around
At
this stuff.
some point, we will build antibodies. At some point, we will get a vaccine. But people that are hoping that's going to be next week, they need to stop that. It's not going to happen. These
Mhm.
things take time. They just do.
Mhm. Another one of these headlines, and we talked about this on the podcast yesterday. We knew we're going to continue to see headlines like this. DGX, if you can, Quest Diagnostics, they came out and announced that you can get an at-home, which isn't really at home, Cody. I don't
Not really
think.
at home. No,
No.
it's just you go to one of their satellite sites and they'll draw some blood and then they'll send it to the lab and test it.
And it's an antibody test, right?
Yep, it's an antibody test.
And you still have to qualify that you can even take it, I believe, but you don't necessarily need a doctor's approval or something like that. I was reading DGX, if you can here, Noah, give me a look at that chart.
Which one?
DGX.
DGX.
And still, I mean, look at these rallies, guys, on some of these healthcare companies. I mean, it lacks the basis of the fact that this hasn't actually happened yet. Yeah.
Instead of buy the rumor, sell the news, buy the hope, sell the reality.
These hopium rallies are very crazy to me. I mean, they're just crazy.
Buy the hope, sell when it's dope. I don't know. Like that's.
I like that. Buy the hope, sell when it's dope.
Well, is
I
it
don't
dope
know.
right now? I mean, that is
It's
a
dope.
nasty candle up there. So, Mark,
If you
what's your-
caught that W breakout, that is dope.
Mark, what's your read on healthcare? I think it's one of the hardest sectors to analyze personally.
It's one of the hardest sectors, but some of the companies, like especially if there were to ever be a significant pullback, are the only things I feel great about going back into, like an Abbott Labs, even a Quest Diagnostic, a Johnson and Johnson. I mean, a Pfizer, a Merck, who also had earnings today. So there's certain companies that if we were to have that, like, you know, Timmy the Bear keeps waiting for that next leg down, right? Like, when is the market going to sell off 6%, 7%, some sell off of significance? I mean, while healthcare as a totality is very difficult, there are select names in there that are about some of the only names in that I trust at current price levels on any level. So if you were to have a 6-7% sell-off, where would people go to? They'd go to Abbott, Johnson and Johnson, some of these select names that maybe they missed after earnings. So,
or
it's
if we see another massive sell-off, Mark, maybe they don't go anywhere because it's not confirmed. I mean, if you see another sell-off similar that we saw in March, I think that takes away every degree of hope that consumer America has.
Well, if you saw a sell-off on the degree of March, yes, like that might be a backbreaker, but you could also have another wave. I speculate that there is a large percentage of individuals that are waiting for that retest of the lows before they move in with some of their cash.
I disagree with that. I think the largest percentage of the American populace expects the price to go up. I think they're buying at these current levels. I think the smart money sitting on the sideline waiting for a leg down.
Well, that's what I'm talking about. That's the money that would come in.
But the smart money represents 3% of America, not 97%.
Yeah, but how much of the actual total volumes would it represent, right? Listen, there's no doubt if you had a big sell-off, it would spook your average retail investor and they would start panicking in the short
It wouldn't
term.
spook Carl Icahn. It wouldn't
So-
spook Warren Buffett.
No, they want
It
to sell off.
It wouldn't
Yeah.
spook Charlie Munger.
Sure.
You know, and so that sell-off could be bought up at some point near those lows again. Like,
I think smart money's waiting for a sell-off. I really
I
do.
do too. I do too.
Yeah, I do too. Which is, maybe as we get through a lot of these earnings reports and the further through earnings season, the lack of these hopium news catalysts, eventually the market might have to come back to fundamental reality. I am not abandoning fundamentals in the face of just short-term irrational behavior. I'm just not going to do it. So I believe fundamentals will play themselves out over the long term. That's my firm belief, but maybe that's a Timmy Bear argument, by the way. They said that I should use Bear because I'm a Bears fan.
Ah, I see what they're doing there.
They're doing
I
that.
like it. It works for
I
me.
actually like that.
Yeah.
Give me the
Back
bear.
on the markets here real quick. Give me the Russell 2000 if you can. There's a bunch we have to get through. Crude oil, dollar. I mean, we had to focus on earnings here today because that's a story. I saw a headline today that I just had to scratch my head at, that the Russell's outperforming the rest of the market because we're going to reopen the economy. Do you guys buy into that? I mean, Russell does have some strength here. That's a breakout where the rest of the market is not broken out yet.
Russell has more impact on national economic systems than global economic systems. So there is some truth to that argument.
If you're going to buy one,
If the economy opens up and if consumer behaviors are similar and if, but yes, if the economy reopens and you start to see consumer behavior that is similar to what we've seen in the past, then yes, the Russell 2000 will catch up to the S&P 500.
It's an interesting
Well,
chart.
I think that's a big if, but you got to like the breakout of 1300 here.
You got to like the chart. I mean, Mark, there's clear error, isn't there?
There absolutely is. And I think small caps are probably the best reflection right now of how people actually feel about the virus. That doesn't mean they're right? It doesn't mean they're wrong, but it is probably the best gauge of sentiment. I mean, we saw this, we've seen this different times on different storylines over the years with small caps. And I think right now, like right or wrong, price action is probably reflective of what market sentiment is about the virus itself and the virus's impact on the economy itself. Obviously that's not a failed breakout, right?
Mm-hmm.
So
Noah, is there reward to risk in that chart? I mean, I know we all see the breakout here, 1304 though. I mean, what would we be targeting? Maybe the 200 MA?
I mean, yeah, maybe, but I think you've got a $1,400 ballpark, $1,450 ballpark where you have old support that'll run interference before you get to the 200 MA. Risk reward, I think, would be a little challenging at the moment because you're not quite range up, but you've eaten up a good, I don't know, 2/3 of a typical the last two swing ranges up. And so, by the time you get one or two more candles, I think it's ready for a pullback. I'd buy any dip on that, considering where it's at. And if you do want a momentum trade it, you could trail stops. But at the moment, I mean, your support zone's clear down at 1150. And unless you wanted to trail behind like a candlestick on a stop loss, which is fine, lots of traders do that. You could definitely get reward to risk ratio if you thought the target was 1400 to 1450 and you trailed behind candlesticks. But I think that's outside of one swing range. I think it takes multiple swings to get up there.
Mm-hmm. Yeah, it's an interesting chart, relative strength there, obviously, at least on today's basis. And at least there is some clear error. The rest of the market definitely, running into some resistance here. Maybe not the NASDAQ, but let's move on to crude oil if we can. Crude oil, then USO. Let's look at both charts because we require both analysis in days like now. Finally, a day where crude oil is not crashing 30% or up 30% here, Mark. 10, Matt, I'm going to ask you first.
It did crash 30% earlier today, though.
It was down 30 this morning. Is there any support down here, or is this?
Yeah, $10, significant whole number. Absolutely.
Yeah, $10. I think it might have even been pegged near there on the intraday. Noah, give me a read on that chart if you can.
Well, I do see exactly what Matt's talking about at $10 being a fat number. You can see the previous candle low there at 10 and the today's candle low there at 10. It obviously broke that and shot down to 650, but I do see 10 as a solid number and a little downward pressure still. You got lower highs forming on that. So I think where we close here, and I think, do you think it's going to stay below 10, Matt? Close down below 10 and actually spend some time down there? Or is this going to be a harder bottom, do you think?
Honestly, we were discussing this on the podcast I will say at length yesterday. And I say that kindly, but I do see oil eventually stabilizing between 10 and 20. Yes. And I certainly understand the buying mentality of dollar cost averaging, 10, 11, 12, $13, expecting that oil will stabilize between 10 and 20 over the long term. From a short-term trading perspective, no, I want to be a buyer at 10, but from an investor perspective, I can certainly understand that argument. The question I think everybody has, and I said this on the podcast yesterday, is how you're going to play it.
Yeah, that is the question.
If the argument is oil stabilization, how are you going to play that? And I think me and Mark's biggest disagreement we've really ever had in investing is whether or not that's USO or something else.
Mm-hmm. Well, you're not a never USO. You're just not a USO right now. Is that right, Matt?
He's a never.
Oh, no. I am completely 100% out on USO for the eternity of USO.
He's a never nude. There are dozens of him.
I'm a never
dozens.
I just don't believe in the makeup of USO any longer. I don't believe it tracks oil any longer. I don't believe that the initial reason of why USO was created is the current reason why USO exists. And so, no, I do not believe that USO will be the instrument that people choose in the future to invest in oil, given the fact that it's now more of a derivative futures tradable instrument than it is a short-term tracking oil instrument. And I don't believe that, the rolling out of contracts because you're facing bankruptcy is a bullish argument. I think that's an argument of extreme weakness, in my opinion.
Mm-hmm. When does the reverse split happen, Mark? Is that tomorrow?
Today.
It's tomorrow.
So it'll start.
Is it after the bell today or is it tomorrow morning?
Probably
after
tonight.
After the bell today.
And then they price it for tomorrow. Yeah. And it's a 7-1. Is that right? Or 8-1, something like that?
No, and not to recapitulate our entire US argument from the last 24 hours, but I am always nude on USO. So
I think you are going to admit sometime in the very near future, whether it's 3 to 6 months, of how terrible of a mistake that was.
Well,
I think Mark's going to get arrested there for streaking.
And I think the reverse split just gives Wall Street an opportunity to sell it at a higher price.
I personally get value out of hearing traders, especially people I trust like you and Mark implicitly, have differences of opinion. So I got no problem with that. Quite frankly, I loved the conversation on the podcast yesterday, Matt. And we just dropped that episode last night. You and Mark actually have a very different take on this USO situation. I would recommend everybody go and check out the podcast.
How USO is oil now. I would like to hear that argument.
How is it not oil?
Because the futures market always comes down. The futures market is always pricing in a higher price than what is actually.
No, that's not true. That is not true. There are sometimes something that's called backwardation in oil futures contracts.
Sometimes 20% of the time.
Yeah, but right now, listen, how is it not oil? Is my question. When you are
because you're rolling contracts to literally 2021 June.
But what kind of contracts are those?
Do you know the price of oil in June of 2021?
But there is a price that will be impacted on those.
You have zero clue what the price is in June of 2021.
We are listen, without like dominating the YouTube channel on the debate. And if you want to hear the debate, go listen to the podcast, Trading Justice Podcast, tradingjustice.com. We issued a new release of the podcast yesterday. And
if you wants to track the futures market, just trade the futures market. You don't need an ETF that tracks the futures market to do that.
Well, the problem is leverage. The problem is accessibility. Trading futures contract is
give
not.
All your control away to some other financial advisor to determine the allocation of percentage of USO into the futures market. That's fine. I don't think that's appropriate for retail investors.
Hold on one second. I got to go buy some more USO shares.
You can lose more money then. That's fine. But
I love how you said we're not going to recap the argument from yesterday.
In the last 3 weeks, USO is down 70% in the last 3 weeks.
No, but this is how you and I philosophically differ. When something's down 70%, you're not a bottom feeder.
But when are you a bottom feeder at 40%, 50%, 60%?
Listen, 80%, I'm telling you right now, this is ride or die for me. I love what USO has done. I love how they have structured their ETF. Is there short-term volatility in oil prices? Until the storage issue is, we don't know where the bottom of
They
oil is.
literally had no other choice but to restructure the composition of USO. If they didn't restructure it, this is not a bullish argument to buy something that if they don't do X, Y, Z, they go bankrupt. That's not a bullish argument.
If I'm going to buy 100 shares every time Matt says something negative about USO, I'm pretty.
Matt can stay irrational longer than you can solve it.
More money if you want, that's fine. But USO is down 70% in the last 3 weeks. It's literally down about 95% in the last 4 months. At what price is the price too low for you?
Listen, there was fear at the start of last week that USO would go bankrupt. That has been eliminated from the
That
option.
has not been eliminated. Absolutely.
Well, from the option pricing, it has.
Maybe in the next month.
You know, from the option pricing, it has. Like if you go forward on those.
Again, in the next month, they didn't go bankrupt in the next month. Congratulations, USO.
Listen, we both have our stance. We are completely diametrically opposed on this one.
This one's going to take us time to work itself out. I'm a wait. I'm not going to buy USO in front of all of this complexity, quite frankly. I know they've been rolling. I know they've been doing all that kind of stuff. We went through the detail on the podcast. I would recommend going and listening to that, guys. I was compelled by it, quite frankly. Thought it was a great conversation. Go pick up the podcast. It's out on the website and all the podcast apps tonight. Trading Justice is what it is. Let's keep moving through the market. Quick peek at the gold market, if you can here. Noah, hesitation candle. I am with you, Matt. I don't think we have to look at gold every day, but I like looking at gold every day. Just kind of hesitating up here at the top. Matt, you seeing anything in the chart?
I don't care about the chart in gold.
Yeah. There's nothing really there. Just kind of fading uptrend. Doji today.
I do like 1700 support zone though. Kissing off the 20. I do like that.
I like a breakout too. I think there's a couple of different triggers you could start wrapping a trading plan around. The US dollar is stuck, and we got an FOMC meeting, and we're going to talk more about the Fed tomorrow. We're not going to go on the Fed today because tomorrow will be the release of the statement, any policy adjustments. Do we expect anything out of this meeting? Matt, you first.
No, disgusting content, I would say.
Mm-hmm. Yeah. Probably just whatever they have to say. They're going to try to signal that they're willing to continue to do more and more things as they move forward. By the way, they're opened up
the same statement they had, Tim. They're going to say we're willing to support the economy in any capacity, and we're going to be data driven. You know, you're obviously with any FOMC report, you're looking for minor changes in the wording is what you're looking for, because they release the same 600 word statement all the time with just minor adjustments. But I don't expect the Fed to do anything. The Bank of Japan on Sunday night, they lifted the cap on the treasuries that they could purchase, which was at 80 trillion yen on a monthly basis. I don't expect the Fed to make any announcements. Anything the Fed changes, I think, will be non-traditional from a non-traditional reporting perspective, very similar to what they've done over the last couple months. Most of the actions the Fed has taken in the last couple months has just been emergency type reports.
Mm-hmm. Does the Fed have to fight upward mobility in the dollar? Will they have to keep just flooding the markets with money to keep the dollar down?
Good luck with that. What's Europe going to do?
How's that going to work?
What's China going to do? What's Australia going to do? They're going to all do the same thing.
Because a strengthening dollar could be bad for the Fed, right?
Well, what you're seeing right now, guys, is a currency war. You're seeing the extension of the currency war we started 12 years ago. And so, yes, I mean, a higher dollar is going to impact exporting, no doubt about that. But I hope, and I think the one thing that all of us can agree on is that in the face of the COVID-19 situation, that we stop exporting our services as much as we have, that we start building more in America, we buy more in America, we produce more in America. And so a strong dollar can actually help the American consumer and the American business who does business within America. It's when you're starting to talk about businesses doing business outside of America where the strong dollar becomes a concern.
Yeah.
USA.
Come on, Noah, give me an American chant. Come on.
I don't need to. Cody already did it. USA. Come on, everybody. USA. Doesn't work if you're from other countries. Nobody ever chants Canada. Just doesn't work.
All All right, so we just offended 10% of our audience. That's all right.
I'm just kidding. I love Canada. You guys are so cute with your own central government and football league. Canada.
Oh, goodness. Other corporate news storylines. By the way, Bitcoin is quietly creeping itself up. I don't bring up Bitcoin all the time, but we are getting up towards that 8,000 price level. Still an ugly chart, I know, but it is kind of stabilized the last few weeks alone. I'm not going to get into a long discussion on Bitcoin today. Nothing there. Move on to some corporate news. Guys, this gradual reopening of stuff, obviously, it's going to hit many different industries. Let's start with Ford or GM here. They struck a deal or conversations, I guess, with United Auto Workers. They're going to reopen in about May 18th. And I think we're going to see more and more and more of this. Earnings on GM coming up. I'm going to be very, very interested in. Has anybody here bought a car, recently? I bought one in November before the whole thing.
I'm thinking about it. Tim, I'm just considering it. It seems like you could go in and have quite a bit of negotiating power at the moment.
Mm-hmm. Mark,
So,
what's your read on autos right now?
I mean, it's a tough environment, right? I mean, it's a 1-2 punch of demand and consumer credit being lower. I mean, credit is going to be tougher and tougher to obtain from a consumer standpoint until we get a true resolution with COVID-19. They're tightening up. So aside from individuals losing income, Gallup had a poll today that said 1 in 3 Americans have either lost a job, had their hours reduced, or had their wages cut. So you have less consumer money coupled with a tighter credit market. That's a pretty nasty 1-2 punch for the automobile and housing sector. So it just is.
Noah, they're saying you want to buy a boat. Did I miss this news?
Yeah, that was the conversation we had earlier. I'm almost bullish enough to buy a boat. Not quite, but
it's actually really funny in the comments the way you said you had to have a truck, because my dad actually did that. He found a boat, and it was a really good deal that like an ex-wife divorce was like selling a boat, so he got it on a steal, and then he didn't have a truck to pull it with, so he immediately went to the dealership to buy a truck to pull.
That's exactly what I'm considering. Now I do have a vehicle that could pull it, but I would rather pull it better.
You got to get a truck.
Got to go for the truck. So yeah, it's not a bad idea.
Couldn't
you just got to talk the wife into it. That's the real trick.
Your current ride. You got an SUV. It can pull a boat, right?
Yeah, it can pull the boat.
It comes to the tongue.
That's anti-Texas. That's anti.
No, it has to do with the tongue weight and the suspension capacity of his SUV. How big is the boat? Otherwise, depends.
Yeah.
But if you're gonna buy a boat, you gotta buy a boat. You're not just gonna buy a little dinghy.
Well, no, I'm going to definitely be looking for exactly what you're after. Somebody who needs to sell their boat that already took all the depreciation hit on it. That's what I'm really after.
There's always deals like that in an economy like this. There's no doubt about it. Concerning news from a company here today. Did you see Tyson's ad in the New York Times? TSN. Guys,
I saw posts about the ad, but I didn't actually see the ad itself.
If you are easily disturbed by food production stories, do not look up Tyson News recently.
Tyson should take an ad in every newspaper in America. It's up 6% today.
Yeah, they're up. But Matt, they had to euthanize a million chickens or something like that.
They're shutting down plants. They're shutting down pork chicken plants. They had to kill a million chickens, and yet again, Tyson's up 6% today in the face of that news.
Explain that to me, Mark. How can Tyson in the face
just throw a
of
giant
production
barbecue
problems?
then? At that point, just throw a giant barbecue.
Any given's daily price action can only be understood from a series of algorithmic trading and day trading point of view. That's all daily price action is. Whenever there's a news story, it's going to create a trigger one way or another. So price action on a day does not have to make sense from a fundamental big term picture. It's all nonsensical. And yet it makes perfect sense from an algorithmic microscopic view. The Tyson story, though, is a reminder that COVID-19 has not disappeared. I know there is this desire to put COVID-19 into the background in our thought process, but this virus it's still present. We do not know if there's going to be a second wave. We do not know if there's going to be a gigantic continuation of the first wave. especially as we reopen up. It is nice to put it in the backdrop and just pretend that brighter days are future. And listen, I hope that's the correct thing, right? Who wouldn't want to go back to their normal day-to-day activities? But as far as market risk, as far as societal economic risk, it's not gone away yet, people.
No, and Cody, they can't just hold a big barbecue. That was a very cute Texan
What?
thing to say.
Why not?
We can't just.
Don't they have a? I mean, they have a homeless problem in New York. They're slaughtering all these chickens. They could have held a barbecue.
Dude,
don't give me that. They could have done it.
You've got to be able to process it. You got to have workers there. You got to have all
That would
kinds
be
of things
tough
there.
to social distance with the meat and chicken barbecue, though.
Yeah. I think there's a story from the Great Depression in the 1930s where the government had to kill cattle because it was more expensive to process them, get them to people, even in the face of starvation and stuff. Concerning story.
Just give them a handbook and explain to them how to butcher the chicken themselves.
I don't know why I keep coming
I
back
don't
to
like the killing of animal storylines. It kind of makes me depressed.
It depresses me as well. And a last one here, Amazon, if we can. New York Attorney General and then a congressman. They had two different headlines here today that was concerning if you're an Amazon bull. The New York AG came out and said that basically you're violating OSHA laws. You're not keeping your workers safe. And we've heard a lot of that kind of chatter from people working in these Amazon factories. Amazon's challenging some of that stuff as well. But then I think there's even a lawsuit pending. Some congressman wants to bring a suit against Amazon over some patent or whatever it was. Mark, this factory situation, the coronavirus isn't going to go away. For companies like Tyson, for companies like Amazon, for companies that have to bring workers back into the workforce, not only from a compliance standpoint, an OSHA standpoint, a safety standpoint, but don't you think we're going to continue to see this headline like the Tyson thing? They got to close a plant. Amazon workers are going to strike. The AG says you got to have better health standards. Isn't that going to be a consistent theme as we reopen this economy?
Well, it's hard. The only way it is not a consistent theme and the only way we are not dealing with COVID-19 is if somehow antibodies are in such a massive percentage of the population and there's two parts of this because antibodies are enough and they're effective at stopping reinfection of the virus, neither of which we know on whatever level. Get used to rolling clusters and that the virus is going to be with us and a weight around society's necks for most likely a very long time. That's just the reality of the situations from anything we know about the virus, unless somehow one wave cures it all. But that's not how the flu works. That's not how viruses work. There's mutations, there's reinfecting, and you're going to see as we open up more and more, and I'm not saying we shouldn't open up. That's not the argument I'm making. But as we do open up more and more, you are going to see these type of storylines happen a lot, where clusters form within closed communities, businesses, and those businesses are going to have to shut down in the short term in order to reset and put better safety measures in.
Mm-hmm. Let's get some final thoughts. Let's wrap this one up here, guys.
My
Obviously,
final thought very quickly is this. Our father didn't care about OSHA laws for 40 consecutive years. I don't think Amazon does either.
They're going to have to. They're going to get sued by their workers. They're going to strike and form a union, I'm guessing.
Amazon's on a three-story house with zero ability not to fall down, putting on trusses at 9 years old. OSHA laws are overrated.
Listen, we dropped a nail gun on Dad's head one time. It could have cracked his skull. Chris fell off a two-story house once off a piece of plywood.
Well, that's why Chris stopped getting on the trusses because Dad thought that I might not fall down.
How many rusty nails did you and I step on and have to get?
Oh Lord, I had a
shots
shot
over the
at
years.
8 years old because my dad tore down a house and sent me and Tim with crowbars out there to pull all the nails out of the lumber so he could reuse the lumber. And I think both of us got tetanus shots that day.
Noah, there was this old building. It's hard to even call it a house. It was probably 150 years old, 1850s, 1870s, something like that. It had nothing in it. It was used as a cattle staging place to put cattle into a trailer. Dad decided to take a backhoe and tear it down, literally just knocking things onto the ground into a big pile. He gave me and Matt a hammer and a crowbar and said, "Go pull the nails."
Yeah. And when we said he took the backhoe, that was his toy. He bought that backhoe solely so he could go dig up stuff and tear down shit.
Yeah, it's true. It's true.
I like it.
By the way, Alphabet tonight after bell, Boeing before the open tomorrow. Matt, I'm more interested in Google. I don't think it's even close, but are you more interested in Boeing or Google? Because Boeing's reporting tomorrow before the open.
Definitely Google. I mean, Google is much more important to the overall marketplace, no doubt about that. Boeing, just because my hatred of all things Boeing, I'm interested in. But I would say Google more than Boeing.
Yep. More earnings tomorrow. Fed roundup. We're going to keep breaking down the markets. We're going to have some fun while we do it. Mark, real quick, how do people join our community, our pro subscription? You're my pitch man recently. Explain the trial if you can.
Just listen. If you want to be motivated, I can think of a better pitch man than a speech that stands up over time.
They might pull us from YouTube.
Yeah,
Cody, you might
This
have
is
to
not
remove
this.
this, by the
This
way.
is on YouTube.
It doesn't matter.
YouTube will pull us
Matter.
for doing the same thing twice. Turn off.
Fine.
I appreciate the effort, but the YouTube police, I mean, listen, we've got to be Google's best friends here, guys.
Mark, our Trading Justice YouTube channel got shut down and never reopened because we did that.
Yeah. We can't do that. Cannot do that.
You can't share a video from YouTube on YouTube.
Nope.
Well, because whoever owns the clip, Viacom or whoever it is, I mean, whatever the company is, they'll put a complaint. They have algorithms
That
running.
was only being played for what, 2 seconds?
I don't think that'll
I
get
might
played.
get an email from Viacom today.
Yeah, we'll see. We'll see. Although I do like it. Go watch the speech. It's not my favorite speech in a movie of all time, by the
Oh,
way.
it's a good one
It's
though.
up there though. It's up there.
Son of a Woman, Al Pacino at the end.
Oh, overrated.
Oh, not overrated. Fantastic. And also Al Pacino in that football movie, the halftime speech, it was incredible as well.
I watched that recently about a month ago. Again, overrated. He wasn't excited enough. That speech, they were literally taking on aliens, destroying the planet. He united all of humanity to fight the aliens.
Dude, it might
That
be
speech is up there, bro.
It is way up there. It is just, it's awesome.
I like
The
Al
Any Given
Pacino's
Sunday speech is really, really, really
But
good.
here's the thing that we've learned about COVID-19, right? Because one of the great things of that speech is you have this horrible thing facing humanity, and humanity comes together and they coordinate to fight it. What do we see in COVID-19? This horrible thing fighting humanity, and you're going to see massive nationalizations on levels that you've never seen before. So
Let's go fight some aliens, guys. Let's
Dude,
get it
it
on.
feels like a good day to watch Independence Day. We've got UFO sightings. We've got
it does
I
feel like
always
a good day
had
to
a
watch.
problem with the plot of that, because they're able to take down the alien craft with like a Windows, like a
Reality.
DOS Windows platform, like an old laptop. I never really understood
That was
one.
1996. Dispense reality.
Yeah. All right, guys, good show here today. Always enjoy it. We'll be back.
That's right. Baby Mackie looks good. Liam looks good, buddy.
He
did
does
good.
look good. Yeah.
He looks more like his mother.
Full head of hair.
He didn't get your looks.
Unfortunately, he's got my hair. It's gonna stick
did
out in
get
all
your hair,
directions.
though.
I love it. I love it.
Such a cute little baby.
All right, guys, we'll see you tomorrow. We're out.